The trader you become. Prepare your mind before the market opens. Every morning before the market opens, professional traders prepare, not only by reviewing charts, or checking the news, or marking important price levels. They also prepare themselves because they know something important. The market isn't the only thing that will change today. Their state will change too. There will likely be moments of uncertainty, moments of impatience, moments of excitement, moments of frustration, moments when the mind begins negotiating with the very rules that seemed obvious just minutes earlier. That's why preparation begins before the first candle, not because professional traders know exactly what the market will do, but because they know something about themselves. They know pressure changes people. And they know the best time to prepare for pressure is before it arrives. Chapter 1. Why prepare before the market opens? Many traders think pre-market preparation is about predicting the market, trying to figure out whether today will trend, whether it will reverse, whether it will consolidate, or where the next big opportunity might appear. Those things can be helpful, but experienced traders understand something even more important. The market cannot be controlled. Their response can. Before the market opens, their thinking is usually at its clearest. There is no open position, no unrealized profit, no unrealized loss, no fear of missing out, no temptation to move a stop loss, no pressure to make back yesterday's losses. The mind is relatively calm, and that clarity is valuable, not because it predicts the future, but because it reminds traders of what they already know. Once the market opens, that clarity can slowly begin to fade, not because they become less intelligent, not because they suddenly forget how to trade, but because pressure changes the conversation inside their mind. The stop loss that made perfect sense 10 minutes ago may suddenly feel too close. Waiting patiently for a setup may suddenly feel too slow. The one contract position may suddenly feel too small. Nothing about those rules has changed. Only the trader's state has. And that's exactly why preparation matters. Chapter 2. Every rule has a story. Every trading rule has a reason, a stop loss, an appropriate position size, waiting for a planned setup, skipping low-quality setups, stopping after trading hours. At first, these can look like simple rules on a checklist, but they're much more than that. Every one of them has a story behind it. Most were written after a mistake. A stop loss exists because, at some point, holding and hoping became expensive. An appropriate position size exists because increasing size before earning consistency often created bigger losses instead of bigger profits. Waiting for a planned setup exists because chasing trades usually ended with regret. Skipping low-quality setups exists because experience showed that not every opportunity deserves participation. Stopping after trading hours exists because overtrading often costs more than walking away. Every rule represents something that was learned, often the hard way, often through frustration, sometimes through thousands of dollars in losses. Those rules weren't created randomly. They were built from experience. They were paid for, which is why experienced traders don't review their rules because they don't know them. They review them because once the market opens, it's surprisingly easy to start negotiating with them. The rules haven't changed, only the trader's state has. Chapter 3. Remember what was already learned. This is why pre-market reminders matter. They're not teaching something new, they're protecting something already learned. Because remembering is different from knowing. Most traders already know they should use a stop loss. They already know they should wait for quality setups. They already know they shouldn't chase. They already know they shouldn't revenge trade. Knowledge usually isn't the problem. Remembering under pressure is, before the market opens. A trader can clearly see the reasons behind every rule. After the market opens, those same reasons can become surprisingly easy to ignore. The mind begins saying, "This one looks different. Maybe it just needs a little more room. This setup is probably close enough. I'll just make an exception this once." Not because the rules stopped making sense, but because discomfort starts negotiating with them. That's why professional preparation isn't about motivating yourself. It's about reminding yourself. Not because you've forgotten the lesson, but because they don't want to pay for the same lesson over and over again. Chapter 4. The conversation before the market opens. Imagine taking just a few minutes before the opening bell. Not to predict the market, not to find the perfect trade, but simply to prepare your mind. Almost like having a conversation with the version of yourself that will be under pressure an hour from now. A conversation that might sound something like this. Today, the market doesn't need to do what is expected. It only needs to do what it does. The job isn't to control the market. The job is to control the response. Today, there may not be a trade. That's okay. Not trading is sometimes the right decision. Patience is part of the process too. Today, the state will probably change. There may be excitement, there may be fear, there may be frustration, there may be impatience. Those feelings are not a sign that something has gone wrong. They're part of trading. When they appear, notice them. Don't automatically obey them. Today, the mind may begin negotiating. It may say, "Just this once. Move the stop a little. This setup is close enough. One more trade? It'll probably come back." Those conversations have happened before. They don't need to decide what happens next. Today, there will probably be doors. The door to move the stop, the door to chase a trade, the door to revenge trade, the door to increase position size, the door to trade outside planned hours, the door to ignore the plan because today feels different. Just because a door appears doesn't mean it has to be opened. Every door is a choice, and every choice moves the trader closer to or further away from the trader they want to become. Today, when the state changes, don't immediately change the trade. Pause. Remember, the professional response has already been decided. It doesn't need to be created under pressure. It simply needs to be remembered. Retrieve the professional response. Chapter 5, Retrieve the professional response. Every trader has moments. When the emotional response appears first, the urge to avoid a loss, the urge to make back what was lost, the urge to catch the move that seems to be getting away. Those moments don't make someone a bad trader. They make someone human. The question isn't whether those moments will happen. The question is, what happens next? Professional traders understand something important. The first thought isn't always a choice. The second response usually is, that's why they prepare it before the market opens. When fear appears, retrieve the professional response. When excitement appears, retrieve the professional response. When frustration appears, retrieve the professional response. When temptation appears, retrieve the professional response. And what does that professional response sound like? Place the stop loss. Trade an appropriate position size. Wait for the planned setup. Don't chase trades that aren't part of the plan. Follow trading hours. Follow the process. Nothing new, nothing complicated. Just returning to decisions that were already made for a reason. Chapter 6. Every reminder protects a lesson. Every reminder exists because something important was learned. Use a stop loss. That reminder protects a lesson. Trade an appropriate position size. That reminder protects a lesson. Wait for the setup. That reminder protects a lesson. Don't trade outside your trading window. That reminder protects a lesson. Each rule represents a mistake that no longer needs to be repeated. A lesson that already cost enough. Without reminders, it's easy to treat those rules like suggestions. With reminders, they become something different. A way of respecting the experience that created them. Because every painful mistake taught something valuable. The goal isn't to relive those mistakes. The goal is to remember why the rule exists before the market gives another opportunity to forget. And perhaps that's one of the real purposes of preparation. Not predicting the market, not trying to feel confident, simply remembering the reasons behind the plan. Because when traders remember why they created their rules, they're often much more willing to follow them. Chapter 7. The market will test more than your strategy. The market has a way of testing more than a trading strategy. It tests patience. It tests discipline. It tests consistency. It tests whether today's decisions will be made by preparation or by emotion. Every trader begins the day with good intentions. The difficult part isn't making the plan. The difficult part is remembering the plan. When emotions begin offering alternatives, because that's usually how mistakes begin, not with a lack of knowledge, but with a negotiation. Maybe just this once. This trade is different. I'll fix it later. One more trade. Maybe it needs a little more room. Those conversations don't happen because traders suddenly became careless. They happen because pressure changes the conversation inside the mind. That's why preparation matters. Not because it removes temptation, but because it makes temptation easier to recognize. And once it's recognized, a choice becomes possible. Chapter 8. The choice. Perhaps that's what preparation is really about. Not trying to become fearless. Not trying to eliminate emotions. Not trying to convince yourself that today will be different. It's about remembering that every moment of discomfort still contains a choice. The choice to follow the plan or negotiate with it. The choice to retrieve the professional response or react to the emotional one. The market may offer hundreds of opportunities today. It may also offer hundreds of temptations. Professional traders understand those aren't the same thing. Not every opportunity belongs to them. And not every feeling deserves a response. Sometimes the most professional decision isn't taking another trade. It's following the plan that was already made. Final thoughts. Before the market opens, the charts aren't the only thing worth reviewing. The trading plan is. The rules are. The lessons behind those rules are. So that when you recognize your state has changed, or temptation begins to appear, you don't have to figure out what to do. The professional response has already been decided. It doesn't need to be created under pressure. You simply remember and retrieve the professional response. Because every rule exists for a reason. Every stop loss, every position size, every trading hour, every setup represents something experience has already taught. Preparation isn't about learning those lessons again, and it's about remembering them before the market asks the same questions. Perhaps that's why a few quiet minutes before the opening bell can matter so much. Not because they predict the market, but because they reconnect traders with the person they decided to be before pressure arrived. So perhaps before the market opens tomorrow, take a few moments, review the charts, review the plan, but also Review the trader who will be making the decisions, because the market may change, the state may change, temptation will probably appear. The doors will probably appear. When they do, notice them, pause, retrieve the professional response, and return to the plan that was created for a reason. Because trading isn't only a journey of learning how markets move, it's also a journey of learning how to respond when the mind wants to move away from the plan. And perhaps that is the trader you become. If this video was helpful, please consider sharing it with another trader. And if you'd like to follow along as we continue exploring the psychology behind consistent trading, please consider subscribing. Thank you so much for watching. See you in the next video.